So you're looking to buy a home. Well, congratulations first off. One of the things that we're going to want to discuss is your budget and understanding your budget. So today we're going to discuss a comprehensive guide to determining your home buying budget. Buying a home is a significant financial milestone that requires careful planning and, of course, consideration. One of the crucial steps in the home buying process is determining your budget. To make a well-informed decision, you'll need to assess your financial situation, including your income, expenses, and any savings that you have. In this episode, we will delve into the details of how to determine your budget for buying a home, ensuring that you find the right property that aligns with your financial goals as well and your capabilities. So the first thing that we're going to want to do is we're going to assess your financial health. Before diving into the home buying process, it's absolutely essential to take stock of your financial health. Start by evaluating your current financial situation, including income. So we're going to calculate your monthly and annual income, considering all sources such as your salary, bonus, rental income, investments, things of that such. Then we're going to look at your expenses. So we're going to want to create a detailed list of your monthly expenses, including housing costs, utilities, groceries, transportation, insurance, and any discretionary spending that you have. We're going to want to be honest throughout this assessment, so make sure you do that. Now we're going to look at your savings and your assets. So we're going to want to take stock of your savings, investments, and any other assets that you can use as a down payment towards your payment, or even towards closing costs or buying down your rate. Now, the next piece that the lender is going to look at specifically is, of course, determining your debt-to-income ratio. Your debt-to-income ratio is a crucial factor that lenders consider when assessing your eligibility for a mortgage. To calculate your debt-to-income ratio, basically, you're going to want to add up all of your monthly debt, including, credit cards, auto loans, any other loans, any basically financial obligations that you have, and divide that by your gross monthly income. A lower DTI ratio is more favorable for obtaining a mortgage. Now we're going to want to take a look at considering your down payment and your closing costs. When determining your budget for buying a home, remember that you'll need to make a down payment, typically a percentage of the home purchase price, 3.5%, 5%, 10%, 20%, all depending on the different program that you choose. Additionally, we're going to want to budget for closing costs, which include fees for appraisal, home inspection, title insurance, and plenty more on top of that. So having a clear understanding of these expenses will help you plan accordingly. Now, the biggest piece here that we're going to do is we're going to want to establish your comfort zone. Your budget should not only be based on what you can afford, but also on what you can, feel comfortable paying each and every month. Factor in your desirable lifestyle, your financial goals, and potential future changes in your income or expenses. Striking a balance between affordability and comfort is absolutely key to successful home purchase. At this point, once you've done all this assessing, you're definitely going to want to qualify, go and pre-qualify for a mortgage. Consider getting this pre-qualification for mortgage loan from a lender. This is probably one of the most important steps, to be honest. This process involves providing your financial information to a lender who is going to take this information and assess your creditworthiness and give you an estimate of how much of a home you can, how much money you can borrow towards the home that you're going to be purchasing. This can help you narrow down your home search and properties within your price range. I definitely recommend that because you don't want to be looking outside of your price range, below or above. Now, we're going to also want to create a realistic budget. So based on your financial assessment, that income ratio, down payment, closing costs, we're going to create a realistic budget for your home purchase. Be sure to account for not only the mortgage payment, but also property taxes, insurance, potential maintenance, repair costs, and of course, HOA payments on top of that. This is where you're going to want to seek professional advice. Consulting with a financial advisor or a mortgage broker can provide valuable insights into your budget and help you make an informed decision. They can assess you in exploring different mortgage options, structuring your finances for optimal home affordability. I've seen them even take a step further and help you determine if you need to pay down some debt in order to get a little bit more affordability and a higher, purchase power. So, in conclusion, determining your budget for buying a home is absolutely critical step in the home buying journey. By thoroughly assessing your financial health, considering your debt-to-income ratio, accounting for down payment and closing costs, and creating a realistic budget, you'll absolutely be better equipped to make a wise investment that aligns with your financial goals and provides a comfortable and stable future in your new home. Remember that financial stability and peace of mind are absolutely keys to successful homeownership. Let's catch you next time.